This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and there's really nothing to do for a few days whilst we get through this FOMC window. And then I pretty much expect the shakeout to be complete and for us to be up only into the Christmas period, right? So it's been a long time coming. We've been patiently waiting for this Santa rally. And I think we've just got this one final hurdle to get through now, which is, of course, tomorrow's FOMC meeting and the Fed interest rate decision. So we'll briefly touch on that today, a couple of other things to show you. We'll check in on some charts and live positions as always. But then really, I'm just going to be putting my feet up, winding down a little bit. I'm not going to be a tape slave, okay? I know people are going to say, well, what if the Fed says this? What if the interest rates do that? At the end of the day, I don't care, right? As always, and we say this literally every single month, around FOMC, there's going to be some chop games and volatility. All right, I'm just going to step out of the way. It's the weekly closes that are important to me. I've been saying for a while, I expect a bit of a pullback, which again, when we get to the charts, I'll show you. And then once this hurdle's out the way, once all the tape slaves have been stopped out a bunch of times trying to trade the intraday price action, then the market will choose a direction and we can back that direction. Okay, so I'll show you all of that. My entire timeline is full of this. The US will allow Nvidia to sell these chips, and Nvidia is surging on the news. This is massive news. Buckle up. You know, I was quoting these exact terms, but Nvidia finishes the day marginally above 1%. Like, this is what we have to deal with, right? Zooming in and being a tape slave. And I mean, this, at least at the time of posting, was closer to 2%, but we closed somewhere down here. So I really don't think it matters, to be completely honest with you. I think we just got to, like I said, sidestep all of this, let all these other accounts and stuff worry about it, and we'll deal with it later. So there's really not a great deal of quality on the timeline. I did think about this yesterday as a bit of a thought experiment, which I wanted to share with you, right? People have been very quick to consider Saylor and MicroStrategy potentially going broke or blowing up this cycle. All right, and I think that's understandable. Humans are kind of wired to be cynical of things. It seems fairly reasonable to just look at this whole situation and say, is it akin to a Ponzi? Is issuing stock and then raising cash and then buying Bitcoin with it? And can he continue to do this perpetually? And then there's the dividends and all this other stuff, right? But has anyone considered the alternative, right? What if these concerns are misplaced? Saylor is actually a genius and has actually figured out a way to keep doing what he's been doing. And then fast forward a few years, he's going to end up with 30% of the supply, right? Then what happens? Markets have a history of functioning like heat-seeking missiles for these kind of big players, right? Whenever people try to corner a market or control a market or buy up a huge chunk of the supply, the market has this way of kind of seeking destruction, right? Seeking to eject this big player from the market in any way that it can. And if there is a vulnerability somewhere in the system pertaining to Saylor and strategy, then somebody will find it and somebody will exploit it and Saylor and strategy will blow up, okay? But if is the key word there. There might actually not be a vulnerability. He might have actually come up with a foolproof plan, right? A bulletproof idea. And if so, then we should just see the technical targets hit on the downside, which for Hyperwave is 35. We should get a 4-year cycle low late 2026. And so long as nothing gets blown up and all the Bitcoin is still on the balance sheet, or at least the vast majority of it, let's say in the worst case scenario, then it should still be a screaming buy out of that 4-year cycle low with, I would speculate, even larger performance than we've seen this cycle, purely based on the idea that the QE will be far greater this time around out of those 4-year cycle lows. Now, of course, as always, I maintain the Fed is going to be late and reluctant to print. We're not going to see any outright QE until late 2026 or potentially even early 2027. But so long as this thing doesn't actually blow up, then I do believe this is one of the best opportunities coming out of those 2026 4-year cycle lows. So as I often do, I'm going to take a back seat here, okay, and just let it play out, right? I don't care. We'll see what happens, and when we actually get down towards those technical targets and the 4-year cycle lows, then we can actually talk, right? If it hasn't blown up by then, we can start to build a position and average in at the lows like we did at the last 4-year cycle. And in the meantime, it's just kind of a let's sit back, relax, and let the market do what the market's going to do. I don't really want him to be blown up, but I also don't like the idea of one entity just continuously accumulating more Bitcoin than anyone else is able to do. So I'm kind of indifferent here, but I do know one thing. It's going to be an enjoyable show over the next few years to see which way this thing goes. As I said right at the start, we know it's FOMC today, okay? We also know nearly 90% probability that we'll be seeing a 25 bips cut. And of course, this is determined and derived from the bond market futures, and it's the bond market in aggregate that sets rates. So once again, tell that to the bond market. We will see a 25 basis point cut today. Tomorrow. We will see the 25 basis point cut tomorrow on the 10th, Wednesday, that is, okay? And then from there, of course, we'll expect the chop games and volatility that we always see around these meetings, followed by eventually the market revealing its direction. And I think what we're doing at the moment is setting up a pullback, right? I think we're already in a pullback. We're going to maybe bottom Wednesday or Thursday, and then we'll close the week rather bullish. That's my expectation. And I think in the worst case scenario, we trade down into the end of the week, and then maybe Monday or Tuesday, we get a turnaround, and off we go to new highs with the big rally into the end of the year in the Santa rally that we've been talking about for a long time on this channel. And again, I expect this to be driven, this year-end rally, and perhaps even a spill into next year, early, let's say January, maybe February if we're really lucky. Okay, I expect all that to be driven by this story that rate cuts are bullish, that liquidity conditions are easing, and that printer is coming, right? And outright QE is just around the corner. But remember, very few understand this mechanistically. QE is a monetary policy tool designed specifically for periods of very low interest rates and economic distress, not high interest rates, and certainly not markets at all-time high, okay? Its primary goal is to lower the long end, which is not necessary or even practical when rates are already high. So we will continue to let the masses do them, okay, and cheer on this idea of liquidity and up only forever. As I've been saying for a while now, I expect something like this to occur, pullback, okay, and then that turnaround after FOMC and a nice strong finish to the year for a big Santa Claus rally. That's what I expect across the board. If you know where to look, you can already see leadership occurring here. Like, for example, in the semis, okay, the semis are pushing higher and SMH is pushing even higher than this, okay, so the leadership is there. Okay, now again, nothing moves in straight lines. Some level of pullback is probably expected. And I've been talking about one of two scenarios, and you can apply this to any of the US stock indexes, the semis, the Russell 2K small caps, whatever. Okay, I'm expecting one of two things. Either a pullback to around 50% of the level off the lows, followed by that year-end Santa rally. Or if we end up going straight through the highs here, okay, then I would just expect that exact same shape to occur like this with a retest of the highs. Okay, so it's either this or this. It looks a little bit to me like right now we're doing the second one. Okay, it looks like we've already started that pullback. So a little bit of a retest here, a bit of a pullback, make all the bears get loud and start cheering on, I don't know, whatever the AI bubble pop narrative is, or the yen carry trade, or whatever their thing is, right? They're going to get really loud here. They're going to be really bearish. Powell will probably say some hawkish things, maybe like, oh, we're not doing QE after all, or something like that. And the market will go, oh no. And we get this little pullback and a shakeout. And then, like I say, it should be time for a year-end rally, okay? And if we don't get that, then we should just get it from here. So pretty straightforward read for me. I don't think this is too complicated. I think it's the same for the small caps as well, right? I don't think that's enough of a pullback. It might have been, but again, I think we'll probably get a little bit of a shakeout first, and then we can moon. Gold looking like it's getting ready for a daily cycle low here, as is silver, I should think, okay? And of course, we're still positioned via the miners. Bitcoin's still chopping around, and exactly what I said of the stock market is true of Bitcoin. So I'm expecting probably either like a retest of the lows, and then we can go. Or failing that, if it's going to continue to move higher, then maybe we get a retest into early next week, and then we turn around. But I do still think all paths lead to higher Bitcoin prices here, at least for the short term. And we can already see some leadership taking over in the crypto stocks, just like the semis are potentially leading the US indices higher. It looks to me like the crypto stocks are leading crypto higher. I also wanted to spend just a moment here talking about the yields and the Dixie. Okay, I've been seeing a lot of people pointing at this, okay, and saying that the yields are going to break out here. We're going to be at 5%, we're going to be at 6% in no time for the 10-year. And I have to be honest, it's rare that I say this, but I believe this is one of the most crowded trades of the year at this moment in time. Okay, if you are bullish yields here and bearish bonds, I genuinely think this is one of the most one-sided trades I've seen. And for some reason, people have been cheering on higher rates the entire time. But remember, it's the bond market in aggregate that sets rates, okay? We wouldn't be cutting, we would be pausing if this was anything more than a counter-trend wobble, okay? So this too will sharply resolve to the downside. Even if it moves higher in the short term, all paths eventually lead to the downside here. And again, I'm just here to tell you, if you think this is a bullish setup, if you think you are bullish on the yields moving higher, then I believe you are on one of the most one-sided crowded trades that I have seen all year, okay? The only trade I can think of that's more crowded than this was the false breakouts we had in oil, here and here, okay? These two were extremely crowded trades, as were these two false breakouts here. But at the moment, I think I would have to nominate this current bullish yield setup as the most crowded trade I can remember of this year at the moment. So by all means, okay, you do you, okay? I'm not telling you have to just say, oh, well, I'm bullish. Well, I was bullish, but now Camel's bearish. I'll be bearish too. Not at all, right? You do you and I'll do me. But something I am very good at spotting here is when the market becomes extremely one-sided. And I believe they are extremely bullish here when they should indeed be bearish. So I know people are going to jump up and down and say, oh, yields are ripping, okay? But they're not really at all. They're at the exact same level they were all the way back in September. okay? And even if they run up here and then reject, like, does that matter? No, not at all, okay? So tell that to the bond market. We're going to keep telling that to the bond market. And the Dixie, I think we have a very nice failed daily cycle here. I think we are getting ready to find another daily cycle low and then left translate and fail again. And then it should be time to see this thing break down and head for that 3-year cycle low inversion, okay? So again, super wild times. This should catalyze the year-end rally nicely for us. And then it should be time to start to price in deflation slowly, right? Slowly at first and then fast later on when deflation actually hits. There's always someone that wants me to cover oil, okay? And since we kind of touched on it already and we're here already, we may as well do that. No changes, right? There's not going to be any changes. I expect us to mostly do nothing, trade in a range for a while, and then have a nice puke into those major 4-year cycle lows. And then QE shows up and we get at least a 10x trade from here. Maybe more like 20x plus in some of the miners and that kind of thing, in the petrol stocks. But that's a long way off, so I'm not going to worry about this too much for now. And I still maintain, even if there's some pops, which there probably will be, these fake outs, okay, because this market loves to produce these kind of fake outs, I believe all breakouts will ultimately fade, just like all the prior ones did, until such time as we have elapsed enough time to reset the major cycle. So no changes there. And as you can see, right, we're still saying the same thing. There's still not a lot of work to do. We just got to get through Wednesday, let everyone else get chopped up Wednesday and Thursday, and then by Friday we should have a bit more of an answer. And especially if we can close bullish Friday after a bit of a shakeout midweek this week, then I would suggest to you the Santa rally has well and truly begun. So I'm your boy Camel. I hope you're doing well. If you want to get started with all things cycles, you can click here in about 10 seconds. And other than that, until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us stormies on a bump.